Morning, everybody. It's the 4th of May. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning. All right.
May the 4th be with you.
Ah, nice one.
Star Wars Day.
Oh, is that what it
Not,
is?
yeah, I'm not into Star
Not
Wars, but
not the
I'm
US
pumped.
4th.
No,
It's next month. No, it's the month after, isn't it? July the 4th.
July 4th, isn't it? Independence Day, yeah.
Cool.
Cool. How was your weekend? Your long weekend?
Yeah, it was nice actually. Yeah.
Good.
Yeah, I didn't get up to anything really. I did my longest bike jaunt. I did an hour and a half on it, 90 minutes. My
Ooh,
shoulders are killing me this morning.
holding on too hard to the bars.
Yeah, I mean, I'm sort of like adjusting myself every sort of like few minutes, but it just, yeah, 90 minutes was a long time. But then after about 25 minutes, I got a call from my son to pick him up. He was stuck somewhere.
Oh,
So I
no.
had to sort of like stop. And they're bringing in a pause button for the Peloton. They haven't got it yet.
Right.
And then I had to go out 15. I got back 20 minutes later and then carried on. And I still beat the guy who was in the thing. So I
Oh,
caught
wow.
up with him. Yeah, I must admit, I
Good
didn't actually
going.
do the endurance. I actually went for sort of a full-on hill for like the next hour. So yeah, it was quite a tough one.
Cool. Okay, well, on to the news. Not a whole lot out by the looks of things over the weekend. Obviously, we've got this situation with COVID in India, which continues to be pretty severe. The Prime Minister over there, Narendra Modi, continues to resist calls from top business figures and world leaders to lock down the country. Obviously, they're continuing to contend with the world's worst COVID-19 outbreak. Elsewhere, we're seeing airline and travel groups in the US and the UK start to open up. So looking quite interested on that front. I'm hoping to get the travel corridors sorted out in the UK soon. So maybe we'll be able to get some summer holidays done. But we'll wait and see. Let's not get too excited yet. On the corporate front, there's this continued shortage of semiconductors, which is at the heart of investor concerns today, and it's weighing on equities to start the week. We're seeing a number of electric vehicle companies such as Ford facing lengthy outages because of the problem. So that continues to be a bit of a concern. Elsewhere, we've got ties between Europe and China that are deteriorating. People siding with Biden's administrative view on the standoff with China and the US. So that's becoming a bit strained. We've got President Joe Biden talking about this $4 trillion spending plan, which is now in the hands of Congress. So that looks like that probably will go through. So that's pretty much it from the news. Not a lot considering we haven't been in for 3 days, but look, we can get stuck into the charts then, I guess. Steve, anything you want to take it away with, or should I dive into FX?
Yeah, you dive into FX and that maybe give me a little bit more of a hint what's going on in commodities.
All right, cool. First up then, we've got dollar index. Now, we've been talking about this narrow trend channel that's formed on the daily chart, and I was looking for a break up of that channel to consider a short-term bottom potentially being in place in the dollar index, and then for a continuation to the upside. So last week we saw this negative candle here. We then saw some indecision here around about this 78.6% fib level, but on Friday we saw this really powerful and impulsive move to the upside on the dollar index, clearly breaking through this channel, and a real strong bullish candle yesterday, on Friday. Bit of a pullback yesterday, but we're pushing higher again today. So it's looking quite good for the dollar index, I think, in the short term, and we could see a continuation higher in that in the short term. So I'll be looking really for a move up to this kind of level here, which is this downtrend resistance line, which comes in from the highs that we posted back last year. Also notice there is a gap in there as well, which could be targeted up at 93.02. So looking pretty good for dollar index in the short term, and of course that's having a knock-on impact on everything else. So let's have a look at euro dollar, flip side of the dollar index, and as you can see here, we saw this big negative candle to the downside, a little bit of a bounce yesterday, but the sell-off has continued today. Now, are we forming a head and shoulders on this euro dollar chart? Maybe we are. It's a bit too early to call it because it hasn't completed the head and shoulders. It would need to break this neckline down here before we can we can call that an official head and shoulders, but it's looking quite interesting. I think. So keeping an eye on that. I think the view on that one is to sell into rallies today, but we'll see how it goes. Cable, more chopping around within this range. Not the best market for me at the moment to be looking at. I think there's probably better options. While we're contained within this range here between 136.70 to 140.04, I think more chop is expected. Aussie dollar, not a lot happening there as well, despite the strength in the dollar index. So more chop there probably as well. New Zealand dollar, US dollar looks quite interesting. We've rallied up to this 61.8% fib level from these highs up here to these lows down here on the 25th of March. That's acted really nicely as resistance, and we are selling off. So I fancy that more than the other markets that I've just shown you on the screen. Dollar yen continues to look pretty good. This has been my favorite play to look at dollar strength, and that's still going quite nicely, having found some support here at this 107.76 level. So it looks like we are continuing to move to the upside here. Next target's up at 110.96. Dollar Swiss, bit of a bounce there. I've drawn on some lines, maybe early stages of an inverse head and shoulders pattern. I was looking for some support to form down here at 90.30, but we seem to have bounced just in front of that. Highly speculative at this stage because, you know, it's only a potential head and shoulders or reverse head and shoulders, but worthwhile keeping an eye on there. Dollar CAD, I was interested in this a few weeks back because I thought it was forming a wedge. I was looking for a break above that 126.47, which never come. And that's still trading around the low, so I don't think that's the best market to be looking at for dollar strength just at this moment in time. Anything else? Oh, euro sterling, still waiting for that to potentially form this inverse head and shoulders. It came very close on a move to 87.19. If it had broken above that, then we could have confirmed this inverse head and shoulders pattern, and then we'd be looking for a move up to 89.66. It hasn't happened yet. Yesterday, a bit of an engulfing candle, and backing it up with a bit more selling today. So I need to see that do a little bit more before we can start getting too bullish on that. Pretty much rounds it up for me on the FX side of things. So Steve, hopefully that's given you a bit of a steer, and you can give us your take on what you're seeing today.
Thanks, Joe. Yeah, looking at the commodities first, I'll look at WTI crude oil. We're still sort of pressuring upwards on here. Obviously, that goes a little bit against the dollar strength. But we have got a band of resistance that we have tested last week, towards the end of last week. Let's get the daily chart up. Yeah, tested here on the Thursday. Friday, we had a decent reversal, a bearish outside, bearish engulfing candle, fought back bravely yesterday, and it's got off to a good start today, but still seems to be slightly pressured to the upper end of the 65.43. Looks like the really the resistance we need to get through before we have a sort of chance of making it up towards 67.80. On the gold, we've got this potential double bottom formation. This is the daily chart, and the neckline has been broken. The measured move target is a move to 1834. Again, on yesterday, we stalled in front of the $1,800 level. That is just purely a psychological level. No other sort of like real horizontal resistance there, or any other sort of like real technical reason for it to stall there, but psychologically 1800 is the line in the sand for the bulls at the moment. So we're in a bit of a band. We can clearly see on the 4-hour chart, we can see this double bottom, this channel, sideways channel that we're forming, and we can see the potential up move if we do get a break of here. There's obviously, as we said before, there's potentially two double bottoms, this larger one here, the smaller one here, both targeting the same level, 1835. So for me, gold is steering that way. Really, though, with dollar firming this morning, we may have to wait a little bit longer. Any sign of dollar weakness in the coming days, and I think we'll be pushing up quite aggressively towards 1835 on gold. On the indices, US indices are still hanging around the all-time highs. not moving very far from there, a couple of 100 points below it on the Dow. Nasdaq again has obviously the tech sector has taken a little bit of a hit, but still within the sort of the upper end of this channel. Let's get this channel across here. That's what we're seeing at the moment, moving towards the bottom end of that channel. So I think a break, if we do get a break of 13,700, then there is potential for a slightly more aggressive move to the downside. I think we'll have a vacuum area between 13,300 and 13,700 where we could easily see the sell-off. But every time we do see these dips, I know we got earnings out today. Joe, you'll come into that in a minute. But yeah, we've I think might be Netflix today, or have we had that already? I'm not sure.
I didn't see it. I'll have a look now.
I think so they've got this vacuum area here, but we still seem to sort of like find buyers every time we get a little bit of a lull. Again, the S&P's hanging around the all-time highs, 4,000, just above 4,200, trading at 4,183 at the moment. Aussie 200 close to the highs. The Nikkei, obviously, well, the main one that I've been saying to watch is this China 50. We're in a sideways channel, potential possibly for an inverse head and shoulders, but a long way off it yet. So for me, there is a sort of like level around about 17,760. And that is the sort of like the cap on the markets as I see it at the moment. So if prices do manage to break above this in China, then I think the overall the sort of equity indice rally will continue. If it doesn't and we break down below the support here, then I think this will be a pivotal time for the indices on a yearly basis. I think we've seen this before where China has basically sold off before all the other indices, and the rest do follow, but it takes a little bit of time. So that's where we are on there. The only other market to look at is Bitcoin. Still potentially in a corrective phase after a 5-wave being completed, potentially at this level up here around about 65,000. We've seen a correction lower, which was followed by a decent bullish engulfing week, but it hasn't managed to push higher. So potentially we could see an ABC correction lower. So I'm still a little bit cautious on cryptos. If we manage to get a break maybe above well, I suppose it is just the sort of like the recent high around about 59,000, then target the all-time high again. But if not, I expect we'll see we've formed a little bit of a double top here on the 4-hour chart. Just here, and we've broken below the neckline, so potentially an extended move really should target around about 52,700, 53,000. So a little bit on the back foot with the cryptos as far as I can see. That's it.
Lovely, thanks, Steve. Okay, so gun to the head trades from last week. Seems a long time ago now, but what have we got? So I went long of dollar yen. Made 40 ticks, 1.9R, nice, so it was nice. And Steve, you were stopped out on oil. So all in all, we made some money last Friday. Oil in oil, 0.9R. So that will do.
Donkey.
Overall, we are just bumbling around these sort of levels around here. No massive upticks. Need to just string together a decent bit of form to see us kick on. Have you got anything you fancy? I'm looking at Bitcoin based on that last.
Yeah, I mean, you go ahead and do Bitcoin, and I think I'm going to look at the dollar.
Well, this is an hourly chart. I mean, do you look at Bitcoin hourly chart? It's obviously pretty crazy in its movement. So highly speculative, of course. But I was just scanning through and just noticed this potential double top maybe in Bitcoin. Obviously, it's very short term, but we've broken below this support level here that I had at 56,208. and in the last couple of hours we've had a little retest of that level and unable to get above it. So I'm going to sell it here at 55,983, stop loss at 57,618, and I'm targeting a move down to here, which is at 48,446. So basically a move back down to those lows that we saw last week. So 4.67R if that pays out from here. As I said, highly speculative, but got to be in it to win it. So let's see what happens.
Nice.
What you got, Steve?
Yeah, I'm really sort of like struggling with the commodities. They sort of like seem to be right mid-range at the moment, so I don't really want to go there. Dollar index again seems to be right on the cusp of a move either way. Probably the only one that really stands out for me on a short-term basis is this shooting star cannon formed from the 8 o'clock open. That we had a big spike up at 8 o'clock as the market opened officially, and it's rejected it, and we managed to set shorts at 70.30 there. So I'm going to go with this. Our analysts think this is a good level to sell at, and I'm going to go with them on that. So I'm going to set my short here at 7.13. Let's put the stop at 7.43. And let's have a target of 69.23. That'll just be a 3-to-1 risk reward. No real other reasons but yeah, we're expecting a move lower. I think we're targeting on the intraday trade a move down to 68.80 area, but I'll go a little bit inside that and go for just 3-to-1 risk reward on this.
Cool.
See.
Best of luck.
Yeah.
Okay, so news-wise today, what have we got? Nothing particularly high impact on the macroeconomic front. Steve mentioned there are a few companies reporting earnings today, the biggest of which are Pfizer, T-Mobile, American Express, and General Electric. So a few big names, and there's also a plethora of other names that are reporting today as well. So we'll see what impact that has. Anything else, Steve, from you?
No, I think that's all it from this end.
Cool. Okay. Well, let's wrap it up nice and early today then. Best of luck if you're trading, everybody, and we'll be back tomorrow morning.
Yeah. Cheers, mate.
Cheers, Ed. Bye-bye.